Profits are up for Nvidia, the tech company known for producing artificial intelligence chips. Revenue in the second quarter was $30 billion. That's an increase of 15% from the first quarter and a 122% rise from a year ago. Wall Street is taking note. Nvidia stock closed down more than 6%, though, Thursday. But overall, it's been up 150% this year. Nico Grant joins me for more. He's a technology correspondent for the New York Times. Nico, help me understand. Nvidia reported strong second quarter earnings that exceeded Wall Street expectations, but the stock dropped by a pretty good amount. What gives?
Yeah, this is not just strong earnings, but really massive. I mean, 122% growth. This is a company that is at the heart of the AI boom. It basically makes the plumbing that companies like Google and OpenAI with ChatGPT use to have their AI systems work. And I think what we saw was incredibly high expectations from Wall Street. It happens sometimes that, Wall Street needs a higher beat and a sort of bigger beat in order to be impressed. Nvidia also announced yesterday that it was having some problems with an upcoming version of its chip technology that will be devoted to AI workloads. It still says that customers will receive those AI chips this year, so ultimately it won't be too much of a delay. But I think that the expectations were just incredibly high.
Nvidia has a market cap of over $3 trillion, one of only three companies to ever do that. I mean, expectations, at some point there has to be a ceiling. So I guess what the question I'm stumbling towards here, Nico, is where does this expectations mismatch exist relative to the larger question of is there too much hype about AI? Has that hype cooled? It doesn't seem like it. Seems like they wanted, the expectations were super high for Nvidia for AI.
Yeah, I think that for NVIDIA, they have a problem that I have seen Zoom have in the past, where during the pandemic, Zoom became an essential service and it started posting these insane numbers, growing by well more than 100%. And what happens is that investors get very used to it. You also start to see, in the case of NVIDIA, retail investors coming in, people kind of viewing, opportunities to make money off of it. And with the stock at over $3 trillion, it's also an opportunity to sell and to make a profit. We're seeing Wall Street banks tell their clients today that you should buy what they call the dip. The fact that it's slightly lower is unlikely to last. There's some profit taking, and there are some folks who may be concerned by troubles with upcoming chips that they have. And the company said that it's going to grow about 80% in terms of revenue in the upcoming quarter. So the pace of growth may slow, which may also raise questions about how long they can really keep this up.
Let me switch gears here and ask you about another tech story. Yelp has now sued its longtime rival, Google. What exactly is Yelp alleging?
Yeah, Yelp is saying something that it has complained about for a very long time, that Google prioritizes its own technology, its own local search services when you do a Google search, say on a restaurant or a hair salon that's nearby. Google will show a map of theirs, and they will basically have the information about the businesses. And below that, Yelp has to compete for space with other companies, such as maybe TripAdvisor, and other companies that present information. Yelp is saying that by doing this, Google is basically taking the monopoly that they have in general search services, which we use for finding out information about anything, and trying to build a monopoly in local search as well. And what is on the company's side, to some, particularly to Yelp's lawyers, they believe, is the fact that Google just lost a landmark antitrust case in federal court in Washington, D.C. earlier this month, in which a federal judge declared the company an illegal monopolist. And now we are going to see a legal process to determine what consequences Google must face for that. But that establishes precedent for Yelp to say, well, see, it is a monopolist when it comes to general search, and therefore it is using that power unfairly to prevent Yelp from getting enough traffic and therefore from getting enough advertisers to really be able to grow its business and be competitive against Google.
And so briefly, what does this mean for the consumer in the future? Does Yelp make a claim of, if it gets a remedy, this will be the better experience for the consumer? What will search look like if Yelp wins?
If Yelp wins, then we will see that Google would have to compete with Yelp. If you search for a plumber that's nearby, for instance, or for a cafe, you may see Yelp. If Yelp has more reviews at the top, you may see a Yelp link at the top rather than seeing Google. And it would mean that Google's services are further down on the page. And so that link to Google Maps might be just a little bit harder to find.
Nico Grant with the New York Times. That was very helpful. Thank you so much, Nico.